Everybody, welcome to July 31st Principal Profit Trader Coaching Call. We're going to take a look at the daily context here. I'm just going to make sure I'm sharing the right screen here. Screen two. Okay, just a confirmation from anybody in the chat that they can see that screen okay?
Yeah, I can see it great.
Okay, awesome. So yeah, it's been an interesting week here because like this is now not really just a short time frame. This is like now what I consider an intermediate time frame. So if we were going to think about this from a multiple time frame analysis perspective, right, we would say that the intermediate time frame, which is the last 1 or 2 weeks or so, is now neutral, right? And I actually even would mark it, I had it neutral bearish. I didn't write it, but in my mind it was, and I gave a hint why. It's because while this was up here, we had this descending wedge, right? That was, in my opinion, when this was up here, that's why I was shorting, was stronger than yesterday's selling tail. Looked like kind of this intraday V. So if you were just looking at what happened yesterday, it's sort of that V recovery, V sideways dip go, but it's only on an intraday time frame, so it's really not that big of a deal. That's what I kept telling myself because on this time frame, it felt like a big deal. Like, oh man, this was a huge move. Maybe it'll just break out now, and I'm just thinking, wait a minute, hang on a second. Let's zoom out. That resistance zone is stronger than this pattern. That's why I took the two shorts. Now I actually I got out of the second short and I went long here. I could have went out here for a small profit, but I wanted to hold it for a little longer. I said, all right, well, I'll just take the loss on it. And part of me was like, hey, this resistance zone, like I said before, is going to be stronger. This is a bigger pattern than this candlestick pattern. It's just visually, this is like multiple weeks, and this is just one day. So I always say bet on the stronger pattern, but I got in for whatever reasons, a little bit of a whatever, a little bit ahead of this zone. But once I saw this fail, in this game there are so many opportunities that really, if you lose well, the best loser wins, especially on the short side. I haven't had a loss in like over 2 weeks because the shorts have been working out so well, wasn't it right here? And you can see on the short side that it just works out quicker, right? And especially in this neutral intermediate time frame environment. And that's really because we're not leaning one side or the other, especially on the bulls. So if that's the case, then since fear is stronger than greed, you can see why the shorts work better here. I'm just going to go into remove the, I was going to try to remove the waiting room, but whatever. Um, So anyway, like the best loser wins. You have to lose win. And in fact, today actually was still a profitable day because my two short winners were more profitable than this loser. So it still was above break even. And that's awesome because really filling out the work that we need to do, like analyzing, back even recently, I like I would never look at what I would like to go into the flow state, and whether it was win or loss, I would never want to fill out my stats like right while I'm doing it, even though I was just knew that was the right thing to do. I would always either wait a week, 2 weeks at best, and sometimes I'd have to hire a guy, my stats guy, who I just met with for other reasons, tech advisor, and we were just working on something else. But it's like I was always depending on him to fill it in. Sometimes a month would go by. It's like, what is really unconsciously going on here? I created that sheet. I know it works. Why? It's not that hard to fill out. It's fun to fill it out while you're doing it. And I'm actually really filling it out right when I'm doing it because I'm not forgetting. And I think, even though I know that sounds crazy because I've been doing this for so long, I still don't like to examine. Like, no one really wants to look at themselves, especially like if they miss out on moves. Like, I shorted this yesterday with a good move, and then I kind of got out before this runner. I kind of made the same mistake here. And, then once we got to this near this bull bear zone, which I have in Bolden, I created a second zone here for obvious reasons. Then we had the buying tail that was exhausted. That was a system setup, right? There's confluence here, here. I'm not just going to have a giant zone from here to here and have a stop behind that. I got to break it up. And that was actually it. I wanted to, short right, go long right there. Now we're having a similar situation today where I shorted this. I also shorted that one, and then shorted this, and then went all out around here and went long, took a loss. Even though, hey, like I said, with this one, top down as I was taking this, and this is not even in hindsight, I said always bet on the larger pattern. And the larger pattern in this case, right, was coming off this descending wedge trend line. This is like an intermediate time frame. We're bet on the stronger pattern that is larger in time visually. Then it's easier to see on a smaller time frame. Everyone was seeing this V recovery. That's only on one day. So that even though I'm reminding myself this intellectually, the adrenaline as it's happening, getting out of my short too soon a little bit. You always have to go from the top down because that actually was the right bet to them. Now things might change, right? In my bias, and I don't know if I might have to put on a position on my other computer here. That's fine, and take a break. But if this gets, into my bull bear zone, I mean, the risk reward on these is amazing, and that's one of the things I mentioned in the channel that when you're getting into a position, don't always just think about entry, right? Think about your risk to reward. And I think that was my quick mistake that I made under duress, right? Duress under performance stress, right? So I shorted here, beautiful entry, held here, right? Saw this. I'm sorry, maybe second. Right, got out, and then saw this bottom building, but we weren't even at this zone. And knowing that the bigger pattern is stronger than this resistance zone, because this is just technically the low of the day and a little bit of this zone ahead of it. See, like if you just look at this, you can't really tell that we're coming off this descending wedge, and that was going to be most likely who's going to be in control of it, right? So always think about the risk to reward. So why was this long? The risk to reward wasn't there. This one, a little bit to the VWAP, fine, right? But the risk to reward on the short side has been so good this past week. I mean, I've shorted this zone every time we've gone up here. You can see a lot of these trades in the channel. I mean, I didn't even get to this one. I'm just prepared to short this zone of confluence right here on the futures exchange, and they work out really well. I mean, that was just, portfolio guys are all these moves, no one's making money on them, but they're obvious trades. I mean, if entries are exits and exits are entries, and we know we're exhausted and we're in this intermediate sideways phase with this false breakout pattern, mind you. I mean, that's not something I'm ignoring. That's why I wasn't like, oh, I have to wait up to here to short. I have these other zones, but I was excited about this zone here because it had so many touch points in the past. That's what I mean by a zone of confluence, and that's what I would call a bull bear zone, right? Like a micro bull bear, because if it breaks this, it can get bullish, but until this really breaks, it is what it is. Now, here, this is a bull bear zone for the longs, right? And I drew this zone above it because I can't have it too wide, and it obviously, you see, this hit. I didn't just do this in hindsight. This hit perfectly yesterday because it hit there. It could really be that simple, right? In terms of the zones, but then how do these zones interact with your trade plan, which is based on a lot of everything else I list in the daily call, plus all those other things that I listed underneath it when I said this is everything I look at. And, trying to do this, yeah, you see, I wasn't excited. I didn't give any long signals here. I got to give myself credit for that. There just was, I mean, this zone is stronger. You have to be willing to let these ones go, right? And right now we can see like who's clearly in control right now. The Bears. And I mentioned that the Bears could get control today if we didn't hold this key zone. I did say that, and I still went long when it popped out. See, you got to there is no perfect in this game, but you can always get better at this chess puzzle. And the best way you can get better at it is become a better person, because the system is completely laid out. I'm not even worried if anyone steals it because it's so hard to do, because you have to master the skill of always coming to the market in the optimal state of mind. So when I missed this move yesterday, I mean, what do you guys think I found? I mean, I shorted this, but this was the real big move. I mean, this would have been an amazing, to not hit. I mean, because I even said to myself, I'm like, the short might have even been a harder trade because it didn't really hit up here in my zone. It's just based on this confluence. I had to go in early. Here I had this nice buying tail. That's an added volume edge, right? I mean, that's why I'm not going. Why aren't I going long here? Because I have this sustained momentum against me. Now it's later in the day. They're in control, right? We just broke this zone, and I'm not at my zone yet. right? I mean, it could move, right? Anything can happen, but we're looking for an edge, right? So this was when I my system said to go long. This is not just in hindsight. I went all out on the short or whatever around here, or maybe right before it broke down. But I did post this in the channel. Caution, right? That's when it was right at the back of my zone. And I had this like this mantra that says, hey, you can take it right at the back of your zones. You have to, it's okay to feel that fight or flight. You can forgive yourself when that erupts because your support and resistance zones are really good and they work day in and day out. Like I have to remind myself that because I didn't even need to wait for this buying tail. Still, I got the buying tail, but I still didn't take it. I think I was like, well, what if it just bounces around? Maybe I'll do it later on after dinner. I don't remember. And then part of me is like, no, Matt, you prepared to go long. You wrote it in the channel. It's near the bull bear zone. That's why I created this little zone above it. So if I get stopped out, I can go long again in this zone. Now, the other reason I said to go long is that yesterday the relative volume was below average. Like that's not going to be a sustained downtrend, right? So I missed that. And that's why I wrote in the channel like great traders quickly recover from mistakes and I'm a great trader. It's not like yesterday was a bad day. I had two winning shorts, but still I could have had this long into the night and then been in a, maybe even more of an abundant mindset where I could have captured this short, held the runner because I did say this the resistance zone has a stronger pattern than the support based on the higher time frame context, and then I would have kept that runner in. But like I said, there is this. This is like a chess game with a lot of different parts, a lot of different moves. You're weighing a lot of different probabilities and aspects at one time to make a decision in an uncertain environment. And at the same time, training yourself to think that even if you're following correct process, it doesn't guarantee anything on this trade. It only guarantees something over a large sample size, and that requires that faith. And it requires, for example, okay, so I missed this, so I was already like that little bit of FOMO, like, okay, calm down. I feel FOMO. You have to be aware of it. And then I was like looking at it in the morning here at 3:15, and part of me is like, that's a short setup, man. I'm like, I'm tired. It's 3:15. I don't want to get out of bed. But that's something that Corby would do. He would have an alarm, and he would just get up and short or whatever it was. And but the thing is that my health is more important. I'm not gonna like. I can't go to the market and perform and trade unless I do these routines in the morning, even if I miss trades. I That was the hardest thing where I'd skip these psychological and spiritual routines because you FOMO, but overall, it will make you more money in the long run because you'll just make less mistakes. I mean, there might be a time where I just took a loss now and I might be in two or three more trades in the same day. That's like one thing I'd always, you know what I mean? It's a habit and not, you can pause. So even though you missed the long, if you come in with an abundance mindset where anything can happen, I also was dealing with, fuck, I told everyone to take off half on the portfolio on Ethereum and SUI. I took off half on Ethereum and SUI and Bitcoin for everybody. I'm like, what if everyone's pissed? What if I'm wrong and everyone loses money? I'm thinking that's not the process. Like, and if we go into accuracy-based thinking, I can't really help you. I can only just follow this correct process and do the probabilities over the long run. And so coming into the day with that is that's that process and that routine that I talk about where you go into the mindfulness meditation of self-awareness where you get in touch with, okay, what's the inner critic saying today? What's the inner coach saying today? Who's going to win out? So I had to just like, okay, plenty of opportunities. I caught the shorts. I'm happy that everything's set up. I'm going, working out. Got to keep fit. Go to the gym. Blah blah. Just trying to like. Then I go into that conscious gratitude. I was really doing this today because I was really feeling like shit that I didn't go along, and it started to like the energy started to in my body started to go away so I could go perform, and then I go to the market. That's that patience where it's like, okay, I'm like, well, maybe there's a short setup. I missed the one at 3 that I wanted to take, but maybe it'll be a double top. You never know. This thing just isn't going to keep going up because all if you just focused on the FOMO and then you went to this smaller time frame, you would be jonesing and maybe just would throw it in anywhere. Whereas if you now do your spiritual routines, you calm down. Now you do your top down daily call, multiple time frame analysis. You go on the higher time frames. You realize we're testing near a intermediate time frame descending wedge bigger picture pattern that has a higher weight visually in time than that little thing here, this little V sideways dip go that was only on the day time frame. So even though I didn't know the future, I have to just do this principle like, okay, I'm just going to bet on the bigger pattern, or I'm all right, for this one, and that one that ended up working out. Now there might actually be an opportunity coming up on the long side, maybe tomorrow, right? as we get near the bottom of this. But keep in mind, in isolation, a descending wedge, because I could just say, like, okay, the short term is the last 1, 2, 3, 4 days. You could say it's been kind of neutral back and forth, but you might even say neutral bearish. You just say neutral, but like, the intermediate term is neutral as well. I mean, we're going to take longs, but the neutral bearish combo thing I've combined because if you just look at it, right, that descending wedge does give a slight edge to, and I mentioned this in the channel, to the bears. Overall, I'm not even talking about just today. Today, obviously, I'm comparing this resistance zone, which was stronger in time than up here was when there was those double bottoms intraday. If you just wanted to fade the low of the day, just go look at the daily. It was up here near this giant resistance zone. So even though it was tempting, you know, it didn't make sense to at least got to that resistance zone, even until they got to the initial support zone rather. But even then, it would have been fine just maybe to back off because of that, right? So that's what we just got to remind ourselves is thinking in multiple time frames. So yes, big picture bias is still bullish. Everything's up. There is still a bigger picture bounce breakout pattern. But on this intermediate time frame, I mean, we have to not kid ourselves. If you just thought this thing was going to break out every time, and while I was going short, you just were buying a breakout, not thinking, okay, now not thinking in terms of what phase of the market we're in, because markets move in a series of thrusts and corrections. We just went sideways, then we thrusted out of it. Then we had a selling tail, which indicates a reversal at worst and sideways at best. Right. Then we go now we have this little mature balance where something could happen. Now we did yesterday. I did mention that because of the mature balance and because of the Fed announcement, that there was certain, and yesterday was an inside day, the prior day prior to yesterday. So there was this volatility contraction plus the mature balance plus the market moving news. So there was like a higher odds for trend. But I also said, hey guys, it increases the probabilities for a trend, but it also could just be a really volatile sideways day because of this overdone sideways intermediate time frame sideways context. And in the sideways volatile day did happen, right? Where it was, the momentum was there. This was a volatile day, but sideways extreme. The momentum couldn't sustain itself. So if you bought here, you're buying at the low extreme of day. It did just break here, but you see how it's different in terms of its edge because now you have the buying tail with the volume. See this uptick in volume? That's an exhaustion reversal signal, and it's near the bull bear zone. So the ATR is more maxed. Whereas here, you're kind of fighting down against a creep down market. And I'm not saying it won't reverse here, or it couldn't, or it might go a little lower. It's just that for me to have a stop, I'm gonna have a really wide stop below yesterday's low, and I'd have to see something else. A wide double bottom, or even though this isn't a wide intraday double bottom, it is that it's an exhaustion, not divergence, but an exhaustion with the hook from extremes and the volatility spike. Here, I didn't call this really exhaustion per se. It was basically a wide double top in a low volume environment at the time with the the descending triangle resistance zone on the daily as the higher weight. So that's why I took it. As you can see, like taking longs is very difficult for me right now. Because for good reason. The shorts have just been really easy and working out. And I should have just kept my short in today for a runner, and that would have been fine. Would have had a bigger winning day instead of a small winning day. So, but that's that. And so basically, with this, if you want to be a trader and a day trader and an intraday quad exit potentially swing trader for runner runs, then you have to master the skill of like self-care with this being. It sounds kind of lame, but being kind to yourself. You know what I mean? Which doesn't mean like you don't do your homework, but it's like you just got to get over your stuff quick. And that's basically you're just developing a very strong counter narrative with your inner coach against your inner critic because you're developed with all those thought patterns that I keep posting in the channel, that Apex mental execution system. Great traders quickly recover from mistakes, and I'm a great trader. Great traders quickly recover from mistakes. I just felt win or loss. I followed my system, and that's what great traders do. That's the one I don't do. You see how I'm like, oh, I should have done this. I was doing that yesterday. Like I should have kept my runner in, and that's when I missed the long. I was like, oh, I noticed that. Like whether win or loss, you should really be emotionally neutral at best because if you think about it, right, our edge is our losses, right? We're getting in and out quickly. Otherwise, just huddle. You know what I mean? Like, and I do that too, but I'm not going to huddle everything. Um, you can get destroyed huddling. Absolutely. Everyone that says, "Oh, you make more money huddling," no, you don't. Which token are you talking about? You know what I mean? So, I mean, the only coin that's doing well today, you take a look at it, is this one, right? And this one, I invested 57,000 and it went down to 600 bucks, and now it's at like 3 grand. So that's because I went against this system that I'm teaching you guys here, which actually works for portfolio management. And I went to a guy that had snapped a photo of his account, and he went from 10,000 to a million, and he had like a huge, subscription channel, like kind of what I wanted PPT to be. He inspired me to do PPT because I was like, this guy's just a gambler, but everyone's paying him, you know, whatever it was a month, like $100, $200 a month. And I got invited for free because I guess his admin was on at the time I would do this channel called Fractal Intelligence where I'd post some TA once in a while, but it wasn't hardcore, it was not signals, wasn't anything professional. But anyway, he was on there, so I got a trial there, and I'm like, holy shit, 10,000 to a million. And it was during that euphoria. We were already up a lot, and I'm telling you, those coins got destroyed. And basically, the way that his strategy is completely different than these principles. Like it didn't matter that the system that I taught was seeing like, hey, we're at a double top. There's major resistance. There's these oscillators. He's like, okay, we have a news announcement next week, and the CEO is going to do this, and that United Nations deal is supposed to happen with ownables. And they would, I know the guy, blah, blah, blah. And that's how they would do their strategy, which is like, that's why I said it's got to be. And then this was like, 4 or 5 years ago when this happened. Actually, 4 years ago, 4.5, whatever. And that's when I got in touch with Kobe again because I was like, hey, man, I think I need to do principles to I mean, we got to do some principles here because I started to do really well. And then I saw I got greedy. I was like, this guy put in 10 grand to a million. I mean, what if I put in, a huge amount? We get a billion. And that's just not, the inner critic can just as well flip and become this inner euphoric guy. What made me like recently hard to call these recent um in Ethereum, at least in SUI, like how when I told everyone to reduce risk, right when it was like making this little top builder, it was rising in agony, as the Japanese price futures traders would say. Right as it was rising in agony, and I was like, my system says to tell everyone to take half off the portfolio, and I need to do that too. I forget who it was. I think it was one of the guys that I worked with in wealth management back in the day. Anyway, it's a guy that I respect. Anyway, psychologically, he's always this contra indicator, but he gets me excited at the wrong time. So I have to remind myself. So he calls me at that time and says, Peter Schiff just said it's a good time to sell Ethereum. What does he know, the idiot? Something like that. Is it Peter Schiff? Yeah, Peter Schiff. And everyone does this thing. And yeah, Peter Schiff or the inverse Kramer rule. So a lot of times people will just invert whatever Peter Schiff or Kramer say. And I'm like, I agree with him now. I'm like, I don't want to look like an idiot. But that was, the right, in my opinion, it was the right thing to do at that time to reduce risk. So well, I guess what I'm trying to say is that knowing the system and knowing what to do is, it's different than executing it in real time because all these other chatters will come in that have nothing to do with the probability and the execution. And that's why we try to filter it out as best we can. But we're human beings and sometimes it's difficult. And that's why, I didn't even really care what if the Fed rate was good, bad, whatever, or what the news is for the Fed, because this system basically says that it's just going to increase the volume and the volatility. So I don't care because if I say good news, interest rates lower, everything goes up, and vice versa. What if the big players, excuse me, were betting against that idea? So everyone took the opposite view of the so-called good news that you were hoping for, and then it still goes down. And that's happened before too. So I said, okay, we got to have a rule here where the news is just a one factor of maybe 12 that increase the probability of a trend. And just put this on alert for a trend or a volatile sideways day, which can feel like a trend. but it's not going to be sustained because remember, momentum is momentum, but you can use momentum to counter trend that as an exhaustion principle if there's not super high pre-market conditions for a trend. Like for example, when it got near the bull bear zone, right? That's why I said that's an auto rule yesterday with the buying tail. Whereas if I went long now, it's a little bit more aggressive. Yes, it's at the low extreme of the current day, but I have to have a pretty wide stop. It's now popping up into that resistance zone that it just hit. So, you know, stacking these edges, like I said, most zones shouldn't be faded unless there's some type of exhaustion or divergence. And obviously the daily call in the top down context is calling for it. So yeah, I mean this was an exhaustion setup. This and the other thing I've been doing lately is I've been using the ES also to time some things. And that's why I shorted the ES yesterday because yesterday in the ES, um, man, I really wish there was an index like the ES for Bitcoin and other cryptos, like the top 3 or 4, because this adds such an awesome edge. So it's not that you can't, obviously I'm trading Bitcoin well. You don't need these indicators, these market internals, but it reduces it gives me more confidence because I know how to use them well. Um, it was at two. I'd have to go look in the channel, but I might have been at 2:30. It was when there was a short yesterday. I'm actually going to find it in the channel and then I'll bring it up here. Yeah, this was at 2 o'clock yesterday. I said, given this bearish divergence in the ES, probably should have kept the Bitcoin runner in. So I'm using the ES as like to gauge my Bitcoin, but I'm also trading the ES. So when I say a bearish divergence, that's a really good setup. And that was at 201. So now I will go here and bring that out for you guys. So yeah, this was awesome. Like, why did I short this as this popped up with volume at 2 o'clock around that time, 2:30, whatever? It's because as this was making a let's see, right here, as this was making a higher high on the day, right? And if you look at where 9:30 was, it's right around here. So it's making a higher high on the day. That's a pretty big, not a pretty big swing, but for this shitty day, it was the first okay swing on the day. And then you look here, and it's like, well, this not only didn't make a higher high, it's actually below its 9:30 thing. So it was weak. It's like this was making a higher high, and this couldn't even make a higher high. So that's a bearish divergence, and they don't work every time, right? This isn't about every single time working, but in the right context, they have a high probability, high accuracy, and they have a good risk reward ratio. I can go on the daily and show you that, but that was a big short, and it also mirrored Bitcoin on this side. When this side started a bottom build, this was at 1525. So at this point in time at 1525, I wouldn't blame you for not, at least I'll look at this one in a second, but I mean we were, like I said, anything 1500 to 2000 is an extreme, right? Which would confirm momentum, sustainable momentum, right? So I don't blame you for saying, hey, I don't want to fade this because, right? And also, let's just based on the AD line, right? Because there's no, I could see like if this went all the way down here and then we were at like minus 200, then that would fade. Then I would go long. That would be a bullish divergence, right? Okay. Now, what was the tick doing? We have to see what the tick was doing. This was at. So just before let's get the right date first. Okay. So just as I talk about how I use the AD line up here when I'm looking for divergences, which is I'm looking for like did the price make a new giant swing high and did this not? And then there's a double divergence, and then there's also a disconnect, which is it has nothing to do with whether one's making a new swing and the other one's not. It has to do with um, what you would expect the AD line to be as relative to yesterday's close. So yesterday's close is here, right? And if let's just say we opened here, even though I know we didn't open here, and this is not price, this is the 89. Actually, you know what? I'll just use this. Right? If price opens up very low, let's just say price opens up here, but then the 80 line was at 172 to 0 to like minus 1 to 200, right? So you would think that if it opened up anywhere around this reference point, around yesterday's close, it would be around 0 to neutral, give or take. But it opened up way lower, so this should also be way lower. But since it's not, that's a bullish That would be, I'm sorry, that's a disconnect, not a divergence. Is that right? You would expect this to be at an extreme with this if it's going to be a downtrend day. Because it's not, right? It'd be even better if it wasn't at like 0 or minus 200. It would be better as if we opened around that time, even if it was at 3:15 or in the afternoon, it didn't matter. And this is still at like 800 positive. That would also be a disconnect. If you can get a disconnect and a divergence, go bet the house on it, right? Yes. And of course, so I'm looking for disconnects, divergences, and extremes for this one. For this one, I'm looking for skews and extremes. So I'm looking for like where's it spending the time, above or below the 0 line, right? Where is my 0 line? Did it get deleted? Okay, good. Sorry. Let's make it just so I can see it. For now, make it yellow. So, right, at 1500, right, the NYC tick was confirming this price, meaning there was a lot of sell pressure. It was for the last couple hours. It was spending a lot of time below 0, reaching minus 1,000, which is an extreme because this is like a moment-to-moment heartbeat. Whereas this is showing like how many stocks are up versus how many stocks are down relative to yesterday's close. And this is showing moment-to-moment buying and selling pressure. Both of these are really awesome. And these Wall Street guys didn't know about these guys that run firms trading this future. I probably shouldn't have said so much, but whatever. The idea is that these are like I said to these guys, I said, these are the only indicators that I pretty much use that I really like that aren't derivatives of price. Every other single indicator, the VWAP, the moving averages, whatever, it's all a derivative of price. So it's like really, if you can read price action and volume, you don't really even need those, but they're very useful if used correctly. But these are ones that actually peer underneath the hood and give you a sneak peek into what's really going on under the universe of stocks in this 500 index. And I use the NYC advanced decline instead of the S&P one because it just gives me more of a breadth of the market, like 3,000 versus 500. And you can see these as high as minus 3,000. Minus 2,000 is super extreme. Minus 2,000 is the most extreme ever, right? But yeah, minus 1,500 or plus 1,500 is an extreme on these, and then minus plus 800 to 1,000 or above on these for the moment. The other thing too is that let's say you shorted this at 413.35, right? Now at this moment in time, right, the tick skew is neutral. So that's another edge for your sideways idea to short that counter directional, meaning the momentum is not sustained when it was up here to short it. Now, don't beat yourself up if you didn't go long here because when we went down here, it was confirming the sell pressure and it's super late in the day. I'm not really doing any, I didn't look at support and resistance or whatever for this example. I'm just isolating and a daily call. I'm just isolating this in conjunction, but it's very useful in how it relates to Bitcoin. And then these two indicators are super good. So if I was trading Bitcoin, I could look underneath the hood and see like, is this momentum going to sustain? I can't, I really got to focus on good trade location with Bitcoin and not jump in early and do crazy stuff because like if this was the S&P 500, I could say, wow, the 80 line, even though this has made a huge new low on this day, the 80 line is not only at 200 bullish disconnect, it also has failed to make two new lower lows, double divergence. I'm going long there with the stop not here too wide because that would be 1,557. That's about 1% or a little over percent. I don't want to risk that much. I would have if I can get my stop anywhere in the next zone, because this is technically in between the zones, then I would maybe go along again, right? If I saw that bullish divergence, because I don't have that bullish divergence, and and we broke the zone, and I have no exhaustion or divergence in this thing, which by the way, I do not trust this CCI as much as I trust those internals on the lower time frames that I just showed you for the ES. I do trust this CCI very much for the daily call top down on the daily time frame, but not as much. What I like though is I like this vertical volume indicator, which you could obviously see in the buying tail for exhaustion when I'm prepared for a daily call sideways ahead of time, which I was. I said volatile sideways. Just volatile sideways are just super hard to trade because it just feels like it's trending against you, which we obviously don't have. This is like a day that was neutral, broke to both sides, and then finished up here, right? It's a neutral day, even though it felt really bullish. Technically, it really just we opened here and we closed here. Super volatile day. Yes, the bulls did close here at the end of the day with a slight bias. They have the bias on the side, but it's technically really not anything more than neutral. That's why I was also able to short as well. And you can just see and I've been one of these guys before too, where it's like, sometimes I was like, why am I going long so much? Like, I know I should be going short. The shorts were always really nerve wracking for me. I don't know if you're in that category, but they really don't have to be because they work out faster if you're on the right side of the market. If you really can do your daily call right and you get a wide double top and you know that you're doing your multiple time frame analysis and you're shorting a zone or whatever of confluence. I mean, this worked out a lot quicker. Right? I'm not saying on this side with this buying tail we didn't get some quickness, but even so, like shorting here and then drop really quick. I mean, you see more sustainability, creep up, right? I mean, technically, right, this price action in isolation, this creep up has a higher odds to break a resistance zone, all things being equal, than something that drops straight line down. That's why I wrote that rule on your zone trade for tradable reactions that if in 30 minutes or so, whatever, 60 minutes, 30 to 60 minutes, it moves like 40 to 60% of the daily range. And that time, it's a good odds for a reversal to at least a favorable tradable reaction. And we have a nice reversal, but I'm just not convinced this is exhausted yet. But yeah, I'm not. Let's go to the daily. So I'm in this. I'm going to show you in a second. I'm in this LTO firm specific channel that got rug pulled, and now there's some new announcement of some new transition or CEO. But really, what's happening is that right? All balances end in a trend for one, and then there's also these pump and dump groups to know that this coin is on its last leg. And what they do is they go into this room had this coin had United Nations connection, so there's talks that we can go to AMA and the Dutch SEC and bring actions, which some people already are apparently. And but anyway, it's like everyone was trying to speculate, oh, pump and dump, this and that, and there were pump and dumpers. But I mean, we know PPT. It's like, well, look, this was broken support acting as resistance. Everything is right there in the chart. So I really get a kick out of people that say things like, TA's bullshit. It's all lines and squiggly lines. I don't know what I'm doing. Yeah, see, I'm even getting distracted by this victims channel. Um, LTO Victims United right now. Sorry. Yeah. Um, because we already know that. So let's go to the daily report. Yeah. So the wedge continues. Well, I mean, if this was higher than like 90, we have 91% volume, right? I mean, that is not the type of volume environment this late in the day that you want for sustainable momentum to the downside. So it's not like, oh my God, this thing has to keep going down. I mean, it's I'm looking to go long at some point. I just need a little bit more edge, either better trade location or some kind of double bottom or a buying tail. I would excuse me if this one whipped down here really quickly. I was talking to you and bounced up. I would just execute really quickly while I was talking with you for a few minutes on my other computers here. But patience is key, especially if you were like so. Right now, if you were going to fill out your scorecard, right, the sustained momentum is, you know, obviously the intraday bias is clearly against you if you went long here, right? The Bears are in control. And, on some level, there is some momentum down, but, it's creeping down. So, yeah, it's certainly not with you. But given this, it's not all out against you. So if you did get that added edge of a tail, then it could indicate a reversal of a higher order. But yeah, this went from like fractions of a penny to a cent. So there's already people that made like I'm sorry, not this one in a couple of days. This was at fractions of a penny, now it's at a cent. And that's just that pump and dump group. I regret a lot of my all of this portfolio that I've created. In a sense, I wish I could condense it down to something that was more consolidated because I think if you get leveraged in the right coins, you know, obviously these are my top three up here. You will do better, and then the rest is sort of in alphabetical order. Theta as a whole from the last bull run that just seems to be getting more amazing partnerships, which is great for advertisement and so on, but obviously not reflective in the price. But if you remember, it moved so fast last bull run, usually, making almost this chart doesn't go back, it doesn't go back far enough to show it completely, but I mean, it would sometimes in 3 weeks, it would make like 300 or 400% gains. So that's that crazy euphoria in alt season that we haven't had. And like I said, I would have been shocked if we didn't get some type of retracement in the beginning of August here because we're so overdone and there's this summer doldrum effect where, yes, there's a lot of businesses that are getting interested in Bitcoin and they're going to be doing the reserves and so on. But there's also a lot of people that want to go on vacation. And, a lot of people are taking breaks and there's just lower. So all the summer doldrums just means is like the doldrums of the seawater analogy. And it just means there's just lower volume. And if you have lower volume, it doesn't mean you can't get creepy trends and explosions. But, we want insane volume to show sustained momentum. And sustained momentum is one factor that increases the odds of a trend. But you also can have, a day like this that, I didn't, once I took this loss here, I didn't say, oh, I'm in the back of the zone. I can't wait to go long again because I realized that you can have a creep down market even on a day with not a lot of high relative volume. Because of the context of us coming from a zone that was stronger than support based on that daily chart, which is here, right? So the resistance zone was stronger than the supports. Until when? Well, until I can get at least good enough trade location where I can get something here, right? But I would, if we take into reversion of the mean and dog leash, and if things start, if this momentum is higher and this sustainability seems a little stronger, this might need more consolidation. But the idea is that if we did get that descending triangle, bigger picture pattern break down, you know, dog leash reversion to the mean, it hasn't tested the blue moving average in a while, right? I would be looking to get aggressive long at those areas. So how's everyone's trading going? And if you can,
Hey,
hey,
doing pretty good, doing pretty good.
so your Ethereum position was actually much lower. So are you in a situation where you're kind of tempted to let it run because you don't really need it right now? Because I thought you got in at a price of 2019, which is amazing, but you got in 2019 the year. So
Yes,
I mean, your entry price was incredible. I mean, you got more
thank
than
you.
10x so far, right?
Yeah, I think it was what did I write down? September 2nd, 2018. I was on GDAX, if you remember back then, good
I
old
remember,
GDAX.
back in
Yeah,
the day.
292.49. So that's why I was kind of asking. I'm just curious how I'm not one to really hold positions too long. I'm usually in and out of my trades, and so I was kind of wondering where do
Mhm.
people, is it a hot potato feeling? Where do you, start shaving profits? I just did
No,
anyways because I don't want that big of an Ethereum position. I
I
like
mean,
it,
I
but
I think you did a great job to do it because I mean, you can see this daily chart, right? I
let me
mean,
see. Yeah.
okay. I mean, so let's just. I know it's always hard. Let's invert it. If you were like a trader, I mean, wouldn't you be like, oh man, this is like a zone that spans since March 12th of 2024, and that's more than a year, and we know that's a major resistance zone. I mean, then I would be like, oh, that's an automatic long. You could, and doesn't have to. You could get a big reversal off this move. So then I'm thinking, okay, so if there's odds for some problems here to reverse or sideways, whatever, at the very least, um, what's my risk, right? Like how much, would you be willing to hold it down to your entry? I'm not saying you are, but I'm saying, would you be willing to hold it down to your entry price of the year 2019? Because if so, then you're the huge amount of risk for what I mean, what's the next really reward target? Well, if I was going to go long here, I would definitely go long here again. So we have like pretty much two major resistance zones. I mean, this one goes back, it's the all-time highs, right? So now it was hard for me to just base it on these quote squiggly lines on a chart when I'm getting the fundamental guys that I in talks with sometimes send me stuff like, hey, Ethereum and Bitcoin, it's reversed its ratio. Um, Only idiots would be selling Ethereum now. It hasn't even broke its all-time high yet. It's due for its run. Like all this, the moon boy energy stuff. And then I'm thinking, okay, well, I can get in and out every single day, right? And I'm okay with being wrong. Like if this does something unexpected, well, great. Then here's my net. Like 50. Then I take 25. And let's say you're wrong every time, it just keeps going up. Well, then you would have a bigger picture bounce breakout, and then you can find using a sideways up entry, another long entry with time frame alignment. So yes, you went in and out, and if you knew the future and you held through all this, you'd make more money. But you reduce risk at these key zones, which is correct process every time where it could get bearish. In this case, it could get bullish, but if we reverse it up, I always like to flip that because it helps my hopium and the fact that we're all rooting for these things to go crazy and we remember what happened last time. But one of the things that helped me also give that signal here is that um, you know there is this bearish divergence in the CCI. I don't give it as much credit as but it is on the daily. And if we look at just a beauty principle, it's not just the way that price would just behave around a moving average. But part of me, when I was making that decision, said, doesn't this pattern, if I could just actually, you know what? I'll do that real quick. Well, I can't do that. But what I wanted to say is that if I just took this pattern from here, doesn't that look eerily like, I just had it, where to go? Like this? Like if I just cut that out like a puzzle piece and then compared it to, it looks so similar. I was like, oh my God, I'm getting out of that. That looks terrible. Like boom, 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 boom. A little couldn't make a higher, made a little higher one, two higher ones, and then one corner that couldn't make it. Two higher ones and one corner that couldn't make it. You know, so uh, it's a risk. Now, what does this have that the last time we were there doesn't have? So it's not like I'm not going to be alerted to a reload for the portfolio. But notice that last time we went up there, it was almost like this super wide double top, right? Whereas this time, first of all, we had more of an extension to the mean, so a stronger reaction up off a larger zone, but also up, sideways, right? Dip, go, now going sideways. So, and then what I mean by this rounded, this sort of V recovery, if you will, is that as it's pulling back with this directional conviction, at least in this time frame here, with this moving average confirming it, it can pull back into this corner, which represents this new pattern V. So I'm not saying that if we go up here, now it has to go all the way down here and come back to this level. But I mean, it could come back here, it could come back to maybe any one of these zones, maybe form a larger bounce, and then start reversing maybe mid to late August. Just as an idea. So at the very least, I don't know what's going to happen here, but that is a zone that is vicious because big zones create big moves. And we've had big moves off this zone, especially this last time, every single time. We know on first test of a zone, it has the best odds of a trade reaction. I mean, another thing too is like, man, I'm like, I would really want to start, wouldn't I, aren't I going to start shorting Bitcoin now and Ethereum? And not that I'm trading Ethereum, but so shouldn't I then take off half my portfolio, even though I do have that crazy huddler guy because I do read about the fundamentals and I follow the news, but it's not always good because you just have to be okay with the correct process and not predicting the future this time. But knowing that it can over a large amount of times is how you can think like that. So to answer your question, if you already took half off, I think you said you took profits. I think you're following correct process.
Yeah, I was I think I was telling you last time there's no way I was going to round trip that whole amount this time and just suffer.
Yeah, I mean I've done that, so no point in doing it again. See, this gives us power because we're not just thinking about greed. Like, how much more can we get? Uh, you know, this guru says to short it, but everyone knows he's an idiot, and I'm never an idiot, right? And now I got to go against him. It's like, no, well, he might be right that time. I mean, really, it goes up, it goes down, it goes sideways. You can have a 3-year-old be right sometimes. It's just a flip. But to be right over 1,000 times, that takes like a warrior of the mind and the body and the spirit.
Yeah, exactly. And then I was asking myself, well, I wanted to de-risk, and I said, I don't want that opportunity cost of having all that tied up in there when there's other trades I could be making.
That's another exact thing I was thinking too. I said, I mean, taking half off of Ethereum, I'm like, I might go into something else. I might go into more SUI. I'll let everybody know instead of Ethereum. And I always say like, well, Corby developed this quad exit with the right language, written into it, so we would override that fight or flight for greed and FOMO. But there's truth hidden in plain sight. The worst that can happen is that it, it goes up to the next zone and you take profits there too. Sounds good. It just won't make as much, right? And that's what we all have to overcome. Like the huddlers want to call the tops in the bottoms, right? And traders don't want to take losses because they think it'll turn, so they let a It could be a small loss into a huge one. And that's why I really like that title, The Best Loser Wins in this game. And I mean, that's the secret for the smaller time frames. And then also because the system is about larger time frames top down, you can see how it just makes you so much more astute as an investor because you're just, you know what these principles. I know it sounds simple to have something defined like a month-long balance is at least this thing called a major zone, and you have to have an automatic rule that you short it, for example, if it's resistance. But it's simple enough, but to actually write that out into a system and look at it and say, hey, I'm going to make this about my system and not me. That's the whole, trick to this. So we don't get, caught up in, accuracy-based thinking or feeling bad. So, like I said, guys, I'm offering office hours this Friday. I had them for a while, and I know people were busy and they just wanted signals, but with Corby leaving and whatnot, I want to offer a little bit more value, maybe get people a little bit more fired up about trading. I know you're getting back into it, Sabril. So if you guys want to meet with me, and if Friday doesn't work, just send me a DM. Usually Fridays are the calmest days of the week. That's why I picked it. But I could also do something over the weekend. Just send me a DM if it doesn't work, and we'll try to find a day. If not this weekend, then next. But also like just repetition is like how you give birth to this skill. And the only way you can constantly show up in the face of all this uncertainty is also that psychology, the skill of the optimal state of mind. And that's what I just said to myself. Like my job as an investor and trader is to follow correct process. It's not to make money today or it has to make money and my thesis for my investments has to work out. My only job is even above the correct process, which is crazy. It's not just I have to follow correct process. That's supposed to be the given, which includes the stops and everything, the risk management, but it has to be the optimal state of mind. And if you can't generate the optimal state of mind, then back off. And then, what if you miss out? What is the read? I mean, I can't tell you the emotions in my body when I knew to do this one and I saw it here and I said, just take the trade and post it. And part of me's like, Matt, I just shorted twice and I'm a winner today. I'm exhausted. I got up at 2 a.m. and this was around 3:15 p.m. So, a little tired at that point, but that correct process was like, I mean, that was the bull bear. That's what I was waiting for and imagining. I didn't even care. I was actually more imagining taking it if it dropped down here than even on the short side. Part of me is like, well, Matt, if it's going to drop down there, then take the short too, you sucker. Because we can go long and short in the same day. And there is a little something that's holding me back sometimes from doing that. And it's just emotional capital. It's like, oh, the winner on the day, we're good. But if it makes sense, it makes sense. Now, here obviously was especially ahead of this zone, was slightly possible, a little too aggressive for me. I'm not going to call it a mistake, but a little too aggressive because it's like I'm thinking, well, why was I willing to go long here? I kind of knew it was a bad trade because I went half size, but like when the bull bear happened in bold, I had this in bold ahead of time and wrote about it yesterday, and I saw the buying tail. And I tell you guys about exhaustion. Why didn't I go then? And it's like, well, like I said, there's a human being at the end of this, and you're not always going to see things clearly. So but just knowing ahead. So and then also missed opportunity. The other thing that I kept saying to myself too after that missed opportunity, it wasn't just, hey man, you caught two shorts. I actually forgot that I had two shorts. That's why I need to fill this out every day. I was so focused on missing the long that I didn't even want to come back to PPT for a while. I was like, son of a gun, I knew I should have took that. But the inner coach that came in but kept battling with this critic that then was like taking in other thoughts, and I said, you know what? The inner coach said, you have 100% control of your mind. There's literally infinite opportunities that can manifest in this market when you follow your steps, correct process every day. You might be a short setup today as it goes back up to there and you're ready to go. And you thought, oh, I missed the long. If you keep thinking I missed the long, you're not going to be thinking about, hey, I'm going to short this son of a gun today. And
Exactly. You
yeah,
know that I'm all about manifestation and the power of the mind and how we literally create reality. I tell people imagine you have a movie projector right in the center of your brain and it's projecting out through your eyes, and everything you see outside of you originates from within. Now you've got it. Now you understand it.
100%. And that's that's the essence of the system actually, because it's yeah, it starts 100, and Kobe used to say it's 99% psychology. You have to get your psyche and your spirit and your whole mood has to be ready for this. And if it's not, if your self-concept and self-image is that, hey, I don't deserve this, or you know, can this be too can is it too good to be true? Can I have, 10 winning shorts in a row and make the whole money? Why not? Why not 12? It could be 30. You don't know. And if you get on a winning streak and it's like, well, what if the next one's a loser, or vice versa? You're on a losing streak. Just know when you flip a coin, the coin flip below that you just flipped doesn't know whether it was a heads or a tails, just as much as you don't know whether this next trade's going to be winner or loser if you're following the correct process. Now, if you're revenge trading, which I've been guilty of, I mean, even in the channel, it's like high hit rate, but on the days when I did take a loss, I was like, oh, I was like, man, I feel like I can't control myself. I'm going to start looking for reasons to get back in, even though there's none. And when you can go into that more of an abundance mindset and thinking in terms of a large sample size, which really comes from filling out your sheets every day while you're doing it. And I just can't believe I never used to do that and hire someone to do it for me. That's like a guy who really doesn't want. I used to say, hey man, I just don't like to type in data. I'm like, yeah, I don't like to type in data when you didn't do it for 2 weeks and you got to fill in 50 trades. That sucks or whatever. But it's not bad doing it like right after, or so. And it also reminds myself, like, what's the setup, right? When it's near a bull bear zone, when I can get a higher risk, like for example, yesterday, we know it was going to get a higher risk because I'm sorry, a higher reward because it had a higher reward and risk potential, higher targets. You know, then I can get actually more aggressive, meaning I didn't have to wait if it came back down to that buying tail. I could get it when it popped back up after the buying tail and even get in again because of the potential reward I can get out of it. Whereas the long I took today, which was kind of shitty, there was no zone that was strong where I can get a strong reversal and get a good, like the reward to risk wasn't good. And even when I was thinking about getting out when it popped up to that broken support zone that was acting as resistance, part of me is like, yeah, just wait for the VWAP. I'm like, you know what? I should go all out right now. I mean, I know it's not my target, but it's hitting this, the low of the day, and that's acting as resistance. But even so, like unconsciously, me going half size, knew the longs weren't as strong today based on that higher time frame thing, and just based on the reward to risk. And what can I get out of this? Not, can I think about my target? And I think what's going to help, and this is reminding me of what Corby said, is like, don't get so swayed by these little time frame pop up because I had a short here, right? And it's okay to take off to reduce risk at the low extreme of the day at this blue thing, but then keep a runner. I went all out, right? And then I really missed the run. And don't let these always think about what the top. So as the fight or flight said to capture profits on the shorts, you have two winners at this point because of that little thing. And then the greed was like, hey man, go long. You missed that long yesterday. It completely overrode the fact that, hey, we're not at a bull bear zone. The reward to risk isn't as good. Doesn't mean it can't work out, but it's not a great idea, especially when the context was that we were coming down from the major trend line. That was who was most likely going to win out today. So yeah, I mean, and then filling out that stat sheet that I sent you guys is really the market review that you need to do, and just confirming it too. When I was watching that video of that the Wall Street day trader who made, I think it was 15 million last year. He not for his firm, but that's what they paid him. He obviously made his firm a lot more money. They trade on huge levels, but they are day trading. He basically said that what separated him and the other guys is that like when they were done and the stress was over, they would all let's go out and have a smoke and a drink, and we'll go do this and go smoke some weed and drink. And well, he did say, yeah, I used to smoke weed, but I always did my market review. Like I stayed around. I even went in on Sundays to prepare. Like sometimes Sundays, I know I should start preparing for Monday, but I'm like, oh, I gotta have one day of rest, because there literally could be opportunities every day. So to not get burned out, why I've been on a winning streak is that I've actually forced myself to take sometimes the weekends off. And then I get really when I'm really on. Now I'd like to get a little bit higher concentration because like there's a lot of opportunities in the night to do that. But then I'm thinking, Corby lost his health doing this. Like you don't have to say, "Oh, I work 20 hours a day," and like, well, that's not, maybe I won't be as good, but I'll work 12 or for 16 hours a day. You know, I, now he can't trade at all, and he hasn't traded in months. It seems like since before he left PPT, he wasn't trading. So, um, no, don't burn yourself out because you want to be in the even as day traders, you want to think about the long run. So, but yeah, Tim, do you have any questions or anything you want? If you're can't oh there he goes.
No, no, nothing important right now.
Oh, you said you're at work?
Yeah, nothing important to ask right now. I'm just watching the markets.
Nice, nice. So yeah, not trading is trading, and watching the market is how we learn. I guess you were trained in ES, so yeah. I mean, um, opportunities maybe on both sides, but yeah, today Bears were in control for sure. But yeah, if you want, send me a DM, Tim. We could talk about coaching more. And I think because you said that you obviously everyone comes in with their own training and their own system, but they get influenced by PPT, or some people go all out into just the daily calls and that stuff. But yeah, I kind of want to learn a little bit more about your system because I think since you're trained the ES, if you could incorporate those internals, I think it would. Maybe you already have, and maybe I could help you do it a little bit better. Would really add an edge to it. And then I think since you already know all this stuff, I think your problem is, or just anybody's at the level where they know everything or knows a system and they've been in it for a while, is psychology. Fight or flight. And the other thing too is like, I think about, you trade while you do like pretty much you do two high performance activities at once. Which I mean, I guess I'm assuming that sometimes you trade like maybe on lunch breaks, and you're a doctor. I mean, that's a you're stressed, a lot of demands on your time. So I don't know. I guess I'm assuming that you trade while or before or in between, but I mean, you might, if that's the case, we maybe could improve your edge by having like designated times when you're off where we do it, where you be more focused, or if there's times when you do have to work, we try to find maybe like a 2 to 3 hour window and not maybe a 9 hour window where you're scanning all day, taking like all peeking in at work and when you can 5 minutes here and there. Because I had a friend that was a trader and he made a lot of money. He had a really good engineering job. He still does, but he's really smart. He's got multiple PhDs, but he's a good trader. He understands it, but he's not consistently profitable. He is on the wrong side of the market a lot, and he does make but I think for a man of his intelligence, way too many mistakes. And I'm thinking, man, I can barely focus on this alone. Okay. And I don't do I'm a hermit. I'm at home. I work my office is at home. I can't imagine, trying to be a doctor or any high performance activity and trying to go into work and trying to do something at the same time. So it could be something like that where we just try to help you find a time where you're more focused energetically.
Well, that would help. I am not a doctor. Not sure where that came from.
I'm sorry. I guess I
Maybe I present
wait,
myself as one. I don't
wait
know.
but you are from the Philippines, right?
No, I'm in Tennessee.
Oh my God. Okay, I'm thinking. So there's another um person with a similar avatar that's different. That may I'm thinking of someone else that's from. Okay, you're from Tennessee. Okay, so you're not. So what do you do if you don't mind me asking?
Oh, I do IT stuff. So work remote, but I do try to combine the two activities.
Yeah.
Working remote does help that. Um, but yeah, I'm not an expert at anything with crypto trading at all. I'm still learning as I go. And I think I've had some relative successes. I know I've shared my stats with you and what I've been able to
Yeah.
do
Yep.
since November when I've taken it seriously. And by that I mean, not just paper trading, but actually doing it, putting capital on the line and seeing what happens. But my problem is some of the trades end up being hodls. where, man, I missed a window or I should have had to stop and I didn't. So I'm trying to learn off of that. I mean, I think I shared in one of your calls recently, like I still had some XRP trades that started in January, but I missed my sell opportunity, and it only recently got back to a point where I could make a profit. So, it's trading, but it's also like, man, it took a long time, and that capital was held up, and I couldn't do anything else with it. So I'm really trying to pare down how long my trades actually are, and that's the problem I've got.
Yeah. I mean, that's what the sometimes we forget when we're investing. It's like our opportunity cost is immense from just capital that's tied up. Um, but I would just say like from every mistake that I've had, I've just had to use that inner coach to reconstruct it as something like positive, like as a learning experience. You know, so what could I learn from yesterday? Well, that buying tail had a really solid edge. And it's okay if you didn't make it or you didn't hit it, because you get the next one. And the market provides an endless array of opportunities if you're just patient and do the right thing. Um, and just to clarify, you are you still trading the S&P 500?
On, but not as intense as like the crypto markets.
And what coin are you trading? Are you trading Bitcoin with a larger position size, and you're just investing in alts, or are you pretty much mostly in alts?
That's how I started back in November. Yeah, but it has like I've been taking profits out of positive trades and then reinvesting them into things that I think are moving, like Meta, SEI. Um, there's just a lot of different coins that I've seen, in the charts. Like it looks good, it's positive, it can make me some money. And when I say make money, I'm not talking like thousands and thousands of dollars. I'm saying like if I can put 5,000 into SEI and it goes from like 30 cents to 32 cents. Hey, to me that's a really good use of the capital because then I just generated 200 or 300 bucks, and that goes back into the pot, and now I've got more to play with. So that's what I'm trying to do is like lots of little wins here and there. Um, I haven't got to the point like you mentioned when you do some trades, you're hundreds of thousands of dollars. I'm not there yet. I'd like to, but I think I got to have a lot more solid win rate off of smaller trades that help build up the capital.
And Timothy, just I think there might be two Tims. So if you don't have to tell me over the coaching call if you don't want to, but can you tell me what your avatar was? Just because I want to know. There's
I
two.
think it's the Ted Lasso fish, the goldfish. Be a goldfish. Have a really short memory.
Oh, okay. Oh, be a goldfish. Okay, okay, good. Okay, Timothy. This is okay. There's another guy named Timotheus who's an S&P 500 trader, and I was mixing you guys up because I thought that was him because he trades on a $200,000 S&P 500 account. So I thought for a second I'm like, wow, you think your $200,000 S&P 500 account small, Tim? But it's like, yeah. So there's wrong guy, but um. I do know. Yeah, I do. Yeah, I know exactly who you are. You're following it really closely, and you're actually doing really well. You have a positive expectancy, like a really good one. Your risk reward ratio is really good.
Yeah,
And your trades, it's higher than mine.
I think since November, like as I said, when I've really been taking it seriously instead of just paper trading, I got 106 trades and 67 wins and 39 losses.
Wow. And what's your reward to risk again?
63% to 36%.
Oh, well, that's your accuracy. Your accuracy is around 63%, which is it's pretty good. It's pretty good. But I remember when you sent me your sheet
Oh,
last time, your
yeah.
reward to risk was like 3 to 1 or 2 to 1. I was like, whoa, that's amazing. That's like really, really good. Like it
Yeah.
wasn't like you had a 63% hit rate and your reward to risk was like I make like 50 cents for every dollar I risk. I was like, ooh, but yours is really high.
But again, some of that is coming with like, to me, what is like a negative aspect. When when the average trade has taken me, more than a couple of days, and some of them end up taking, 100+ days because I wasn't smart about it. I didn't have a stop in, or the position turned into a hodl position. Now I'm just waiting. And like I said, the capital gets tied up. And if I sell it off at a loss, I don't want to do that. So I hold on to it thinking it's going to go back up. And, the capital is just kind of stuck where it is until it goes back up.
So regarding the stops, I mean, I've had situations like that. I mean, that's how my LTO and my Proton at the time and KDA, which was like I think over 100K that I threw at that. I didn't put stops on them all. I'm like, that Elon Train guys knows, and that was a huge dent in my day trading account. You know what I mean? That was 100K, and it's gone. So it's thinking like, wow, did I not have confidence to just be like more leveraged in my trades? Like, you know what I mean? Like you can, so uh, I guess the question is like, what's the fear of the why is there a fear of stop losses? Because you just the immediate effect of feeling like a loser that day that you get stopped. Because that was mine. I'm like, oh, I hope it turns around. I don't want to feel like a loser. It's a Thursday. I want to go out, or whatever. Um,
I think well, I guess I've been burned a few times. So some of the losses that I've taken have been at a point where if I hadn't got out, maybe the market on a particular coin dipped and then my stop order got placed and I'm sold and I'm out of the position. I took a loss. But had I stayed in for like another hour, like the market turned around and now it's up and I would have, I hit the other end of a bracket order. So I would have made a profit. So I've been burned like that a couple times where, just this yo-yo effect of market activity in a particular day, it, it's burned me. Like I've taken losses because of it. And now now I'm really kind of on the fence about it. I know it's the smart thing to do, but I also see like, okay, if I would have had a stop order in on this particular coin, like what's a good one I can bring up because it was really bothered me. Arrow, man, that was, it's a tight market anyway. It's sub $1 coin, Arrow Financial. But
base play.
yeah, so when I've taken, some trades on that, it, yeah, within the matter of a day or 2 days, the stop order would have gone in, but had I stayed in, it's gone back up. So yeah, it's just a matter of maybe it is like what you were saying. Maybe I just have this fear of if I place the stop order and then I take the loss that day, I'm just looking at myself thinking, man, if I hadn't placed the order, the next day it would have gone up and I would have made a profit.
Well,
So
I
that's
think yeah, there was a so on what you said, there was a study said that folks don't fear the financial loss as much as they fear their own self judgment of what their loss means in terms of their trading.
right.
So, I mean, I even with all those audio tapes that I've shared with you with the audio programming from the Olympic coach, the one that I listened to, I just noticed this. It's like there was one that I would like barely listen to, and it was the one on how to take losses well. It was like I don't want to think about taking losses well. Like no one wants to, you don't want to think about the loss, but if you handle that loss first, if you actually visualize, and look, I'm supposed to say, yes, we have to visualize with the creative process, taking good trades and doing all these things. But if you're actually, if you know there's a signal and you're afraid to take it because of fear of loss and judgment, you can actually sometimes just imagine the worst that could happen. Oh, I take a loss, it's this percent, I have it fixed, it's 1% or 1.5%, and I can live another day. And sometimes if you just imagine being okay with taking a loss, then you might be able to sit through something that seems a little bit more uncomfortable. And I would just say I would say listen to that the trader tape on I'll forward it, but it's the one on risk management. And that's the one I'm actually going to listen to as well. That it's losses are built into this, so it's actually a good thing to take a loss, and you shouldn't be. It doesn't mean your system's not right. It's just part of the game, and it's actually a good thing. That's why we have that fixed percent risk rule, which says you're only can allow this much on a trade. So just get out. It doesn't work out. I mean, I when I do it, it's even uh, I get sometimes double the stress because I'm like, not only I'm taking the stress of my own financial loss and my own, oh, is this going to work out? Is it not? Even though we all want to go into expectancy based thinking, we do go into accuracy based. But I also like do it publicly because I give pretty much all my signals lives. And it'd be a lot easier, like, even for Kobe, he wasn't giving all of them live because it's just hard psychologically to do both at the same time. Mechanically, it's hard to do both at the same time, but just psychologically, it's hard to do both. But that's why I'm like, here's the system. I'm trying to lay it out. Here you go. You don't have to shadow me on it, but this is what's going down. And I also like, initially we wanted to do that just to prove that this stuff is useful, that these principles do work over time. But yeah, I mean, like I said, the system it takes, like I said, there's that famous poker player. You can learn a lot from her. She was like Daisy Duke or whatever. And she said, you can know all the probabilities or know when to go in and memorize cards, but it takes this other thing. It takes grit, some kind of gut. Like, you to do the right thing, but you still have to follow through because it feels uncomfortable. So, like, I took a loss the last trade I took on the long. And even before, as it was coming down, part of me was like, just get out early. You don't have to take a full loss to your stop, which it actually ended up being a full loss to my stop. But part of me was like, well, it was supposed to be a balance play and it failed, so just get out anyway. But there was that little hope micro that was like, maybe it'll turn. But at least I didn't widen my stop, right? That's why I think you should set a stop ahead of time on every single trade. And I'm not really a fan of the Baldwin um, exit that Corby used because he's very disciplined, so he can do it. Which is like, I'm going to not have a stop, meaning I get in with like a really far stop just to get in quickly, and I'm going to like sit there with and take a mental stop, and I'll get out when I want to on like a 0.5%. Like, nah, I will wait for good trade location and put it behind the previous day's high or low or whatever, and just as an example, because I will widen stops. I know my tendencies, why, because I don't want to be a loser either. But this is actually a game where the best loser wins because that's why on the that programming after you win or lose, it wasn't like win. You should go have a beer with the buddies and celebrate. It was I followed my system, and that's what great traders do. It has nothing to do about the outcome or how you should feel about a winner or loss. And that's the hardest part about it is that emotional neutrality that you're supposed to approach it with when human beings are anything but neutral emotionally.
Every day is a learning opportunity for sure.
Yeah. Well, this was a great call, guys. Hopefully, this helped you, and it's a real great job on the exit on your portfolio. You held that like a boss. Great job. You know, um,
Thank you.
and great job on your trading, Tim. If you want, you can send me your latest stats as well. Keep it up. You're doing great.
Thank you, Matt.
All right, guys. I'll see you guys tomorrow. Take care.
Thank you, Matt.